I'm sorry, guys. I owe you guys an apology. I don't put enough stress and emphasis on exactly how the money factor works on a lease. This video may or may not turn you away against leasing, but these are the things that you should know before you sign any lease agreement and know exactly the science behind calculating a monthly lease payment. So before I dive right into this video, guys, I want to introduce myself if you're logging onto one of my videos for the very first time. My name is Ari Janessian and I run a car buying service called Boston Automotive Consulting. We help our clients achieve the very best deals on brand new cars, and the whole goal of this YouTube channel is to give car buyers all the information that they need so that they can land the very best deal. And specifically today, I'm going to be focusing on the lease money factor. So if you haven't already and you enjoy solid how-to videos, especially when it comes to negotiating brand new cars, please consider subscribing. Diving right in, guys. So what is a money factor? Right? It's very important to know what the money factor is. And if you're not new and you know what a money factor is, maybe you want to skip ahead about 2 minutes into this video while I explain some of the people that don't know what the money factor is, what it is exactly. The money factor, in a very simplest terms on a lease, is your interest rate that you're paying over the course of the term of your lease. So how they calculate the interest on the lease is basically by taking your traditional APR, like let's say like a 4% APR, and to make things more confusing, they take this simple 4% APR or whatever the APR is that you're being charged, and they divide it by 2400 to convert it to a decimal. So essentially, if you've got a 4% APR and you divide it up by 2400, you get some decimals that equate to about 0.00166. All right. Now, how that works on a lease, here is the scary part. So let's say we're getting charged this 4% APR. Anybody that uses common sense would say, okay, if I'm taking out a loan on a $40,000 car, then I'm paying interest on the whole $40,000. And on a lease, because I'm only paying for the depreciated amount, as in whatever the difference is between the residual and the net cap cost, I'm paying for interest on this amount. Here's where you may get a little bit of a bad taste in your mouth. That's not the case. Unfortunately, this is not the case. How they calculate interest into your lease payment is by taking the net cap cost, as in the selling price of the car, after any discounts that you may have gotten on the MSRP, after down payments, maybe if you capitalized any of the fees, basically how much you negotiated the price down to. They add the residual to the price of this car. They add up together the net cap cost plus the residual. I said it, plus the residual. And then they multiply this by the money factor, as in by the 4%. So essentially, the whole finance charge is based on pretty much the whole car. As in, if you had 4% APR on that $40,000 car, you'd pretty much have 4% APR being charged on a car that you're leasing that costs about $40K. Now, here's where things change depending on how much the interest is, whether you're purchasing or you're leasing. Some lease companies, take for example like Toyota, if they're offering a promotional 3.9% APR on a car, and the money factor that month on the same car, say like it's like a Highlander or something, they're charging only like 1.9%, it's safe to say that you're only being charged half the amount of interest on the lease, even if you're being charged on the whole amount, then say the 3.9 on the whole amount on a purchase. So you got to look out for how much the APR is, whether you're purchasing or you're leasing. If you're being charged a higher APR on a lease versus just financing, it's safe to say that you're being robbed blind. And I'm sorry. So guys, I hope that this video sheds some light as far as what a money factor is, how it's calculated, and exactly how much interest that translates to. Again, how this works is they take the selling price of the car after you negotiate, plus the residual of the car, what the car's value is basically at the end of the lease. They add these two up and they multiply it by that money factor. Essentially, a money factor is, let's say, 4%. They divide this by 2400 to produce the decimal that they're multiplying those two figures from before by. If you found this information useful and you want to see more of these new car buying and negotiation tip type videos, please consider subscribing. Thank you so much for watching, guys. We'll see you next time.